Now gold and silver, precious metals in general, are just ripping to new all-time highs. And so, again, it's my fourth year in a row here, and this is the first year we're really seeing some serious action.
What do you think is going to set this year apart from previous years?
Well, what's going to set this year apart from previous years is the price of gold, obviously. So the gold sector was dead, and a lot of people were super disillusioned with gold and precious metals and commodities in general, because from 2020 to 2024, we saw the most amount of government printing, record stimulus, somewhere in the 10 to 20 trillion dollar range was dumped in the market. We saw some of the greatest inflation we've seen in decades, 9% CPI inflation in the United States, and gold did nothing. And the gold miners did nothing. And so a lot of people became very disillusioned with that. And now it's woken up. Now gold and silver, precious metals in general, are just ripping to new all-time highs. And so, again, it's my fourth year in a row here, and this is the first year we're really seeing some serious action. If you think through like a little bit past first order effects, so why gold? First of all, right? So it's not because of inflation. And so that's like the first answer, like governments print money, that causes inflation. So to protect ourselves from that, we can buy gold. But that's only the first order. Really, that's not the case. What we're really protecting ourselves against is a loss of trust. Now, loss of trust that they'll keep our money sound, sure. So that's the inflation piece. But it's a bigger loss of trust. So we saw, like, for example, when Russia and Ukraine got into their war, then the United States just froze Russia's bank accounts.
Right.
We see, that now with increasing rhetoric of sanctions all the time and tariffs and stuff like that. And so a lot of countries now are more worried about trust.
And do you really own your money?
And do you own your money? And could my money or my assets be taken from me? And the reason why it's important to understand that is because, okay, so it's not really inflation. So I think if you're only focused on the bond market and inflation, CPI, you're not really understanding gold directly. But also, if you're only focused on that, you don't see why Bitcoin might be needed. And so back to your question about Bitcoin. So Bitcoin was designed to be trustless. So gold worked in the old world. When I would hold my gold coins and you and I would do business, I would give you gold coins. But what happened as global trade picked up in the 1500s, gold couldn't handle the transaction times. The settlement time was too slow. And that required us to put gold into a bank. And the bank would then use a ledger to keep track of those transactions. And that introduced trust into the system. And as we found over and over, it can't be trusted, so the ledger gets inflated. The government seizes the gold. They inflate the gold. They revalue the gold. And so in today's day and age, what we're seeing is a breakdown of trust. And so nations are like, hey, I can't trust U.S. Treasuries, I'll buy gold. But how much can they really trust gold either? So do you really have the gold? Will you deliver the gold if I need it? Is that really gold or is it tungsten? I don't know. And so I think at some point, Bitcoin is understood to be more trustless, trusted, but it's trustless. We don't have to trust somebody with it. It can be instant transaction time and instant settlement time, like that. And so I think over the long period of time, it's a generational thing. Gold is that primary asset that's being used right now to solve that trust problem. But Bitcoin will solve that from a bigger scale.
And how is that established through Bitcoin?
How is that established? I don't need a central administrator to hold my gold. And I don't have to trust that administrator to promise they'll pay me the gold. I don't have to promise that they don't have to promise me that they have the gold. They don't have to promise me that it's pure gold. Bitcoin has instant settlement. So literally at the speed of sound, of light, it's transferred to me. I have custody of it. And my node, my computer, verifies that it's a valid Bitcoin transaction at the time of the transaction, unlike gold. And so that's how that trustless state is established. And it's also basically built off of the network, which is an open source network. So if it was being done in a bank's computer system, it's being done on some proprietary cryptocurrency. How do I trust the code? What if the coders put some backdoor in there or some sort of bug in there? But Bitcoin is an open source network. And so there's no backdoors, there's no hacks in the code. Nobody can control it or manipulate it in that way.
So what you're saying is Bitcoin is essentially a way for people to take control of their own finances.
It certainly is, right? So it's a way that we can hold value in something that can't be inflated away, just like gold does. It's very similar to gold, which is why people call it digital gold. but the digital piece is the key component to that. But again, it's a generational thing right now. Obviously, central banks are buying more gold than any time in history. I consider myself a sound money advocate. I was a gold bug before I became a Bitcoin bug. And so, it's sort of like my grandparents, my grandparents would never buy Bitcoin, and my grandkids will never buy gold. That's kind of the way I look at it. Candles were light for 5,000 years, and now we have electricity. So just because something's been around for 5,000 years doesn't mean it changed, right? Like, we didn't have cars, and now we have cars, and so like things change. And I used to have a whole symphony to play a music for me, and now I just stream it over the internet. And so, certainly longevity, we call it the Lindy effect. The longer something's been alive, the longer it will continue. So certainly that matters, but also things change, and technology is what changes those things. From a portfolio perspective, Bitcoin has been the best performing asset in the world. 17 years, 15 years, 10 years, 5 years, 3 years. Yes, gold beat it over the last 12 months, but it's been the best performing asset. So it certainly makes sense if you want to increase your portfolio's performance to put a little bit in there. 2%, 5%, I don't know, maybe 75%. It sort of depends on where you're at there. Whether you have a $100 portfolio or a $100 million portfolio, typically we think about them in percentage terms. And so, you can buy for those of you at home that don't know, you can buy $1 worth of Bitcoin. Bitcoin is much more divisible than gold, even, right? So, like, I could buy a 400 ounce bar of gold. I could buy a single ounce coin. I could buy a gram of gold. If I can't get a gram, I could get 18 karat gold, right? So there's ways to get it, but Bitcoin is divisible down. I could get 10 cents of Bitcoin.
Do you suggest someone brand new doesn't know anything about Bitcoin, they want to start investing? Do you suggest they just start somewhere, or should they find some type of mentoring to figure that out?
Yeah, where does someone start if they want to get invested?
There's a lot of new investors in starting from scratch.
I think, there's maybe a little bit of a bigger question, but I think the first thing starts with like understanding the problem you're trying to solve. Because if you don't understand a problem you're trying to solve, then no solution looks like a good solution to you. And so it kind of starts with like, what's going on with the money? Why would I need to buy something? And then if I understand why I need to buy something, then what do I need to buy becomes more obvious. But I would say maybe start with just buying a little bit, buy $1 or $2, buy $5 or $10, whatever small is to you. And just by putting a little bit into it, doing one transaction, it makes you start thinking about it a little bit, right? And so then you want to start understanding it. Now, on top of that, you do need to understand it, because you can't borrow somebody else's conviction. Maybe I sound very convicted, which I am, but you need to develop your own thesis. So like right now, Bitcoin made a new all-time high in Q4 last year, but it's down right now. A lot of people are like, is it dead? Oh my gosh, what happened? Because they haven't developed their own thesis. For me, I'm like, I posted a chart yesterday. I'm like, this is the best buying opportunity ever. Right. But that's because I went from a different level. So maybe put a little bit into it, and that draws your attention there, but then you have to develop your own thesis. So how do you do that? Maybe the best book, and gold people here would love it, is a book called The Bitcoin Standard. And it does have Bitcoin in the title, but it goes back through 5,000 years of monetary history. It starts with feathers and rocks and seashells. It tells you why gold became the best money ever. So it explains the whole but if you understand that, then you can start to understand how things might progress from there, down to what we call like a first principles level, so that you can start to build your own ideas off of that. So that's probably the best book I'd recommend to get a start there.
What's one of your key takeaways you think will come from the conference?
The key takeaways that will come from the conference, well, for me, it's all about the relationships that I build at the conference, right? So, it's a little bit of a different answer probably than what you're looking for, but I think that most people think of investing or coming to a conference like this to make money, so they're trying to build their financial capital. I believe that financial capital is a byproduct of our relationships, our relationship capital, and our mental skill capital. And so we want to continue to learn and grow and build our own mental capacity, and then we build relationships, and that's what brings the money.
True.
So I would rather invest into my relationships and my mental side, my mental skills, and then the money comes as a byproduct. And so that's why I think the idea is to come to these events, meet people, meet some of the speakers, meet other people like you. Most people don't have like-minded people in their own community or their own friends.
Great place.
And so you want to have conversations about gold and the financial system and gold miners, but like your friends, we call them normies, they're
Normies?
Well, I don't know about you, but but like the normies just want to talk about taking kids on the carpool to school
Right,
or going
the
to a
everyday.
barbecue this weekend, right? And it's like, but don't you know what's happening with the central banks buying gold right now? And so like it's good to come to these events, be around like-minded people that see the world the same way that you do, share
Totally.
these same ideas, and then you can sort of I like to call it like wrestle with these ideas, kind of go back and forth, test that a little bit, and that's how you build your own conviction.
Where can people find you online? You're very successful online presence.
Yeah, I mean, I mostly on YouTube. I do a couple videos a week on YouTube. So they're typically 20, 25-minute thesis sort of driven videos on this. So just search Mark Moss.
Yeah.
You'll find me. Not
Mark
too hard to
Moss.
find there.